Okay, I think we'll just get started. Welcome to Fintech Stories by Finance Innovation. My name is Rea, and it's my pleasure to welcome you all to this webinar. This is a new concept that Håkon, my colleague, who's also here with us today, have initiated. And we're actually quite happy today that we have an international crowd viewing this webinar from participants in Iceland, Sweden, Denmark, and the UK. And moreover, we're extremely happy that TicketCo and Quadfolio are the two companies in the first FinTech Story lineup.
Absolutely, and I think today's topic is very relevant to all founders out there, regardless of sector. So we'll be hearing about how two of Norway's leading fintechs, TicketCo and Quadfolio, experienced unforeseen obstacles in their journey and how they managed to turn things around for the better. We've got two of the founders of these companies with us today, Karl Erik from TicketCo and Jan Åge from Quadfolio. So I'm very much looking forward to hearing your stories in a moment.
Yes, absolutely. But before we start, I'd like to introduce Karianne Melleby, who is Director of Partnerships at one of Norway's leading tech accelerators, Startup Lab. Karianne will be moderating this webinar and leading the fireside chat. And Karianne, before we get started, I'd like to ask you a little bit about your observations on how COVID-19 has changed the landscape for startups that you work with, and what has been the common denominator and challenges for them in this period.
Yeah, thank you. Thank you for the warm welcome and warm introduction. Yes, my name is Karianne, and I'm happy to be here today. And like you said, Rea, I'm working every day on accelerating Norwegian tech startups. And this spring, it was hard when we were deciding to shut down our offices and send everybody home. And then we gathered our team and we decided, so what can we do now? How can we prove ourselves that our little community will be just as strong without our physical office spaces, but still keeping our network available to the founders? And I think that's actually been the key, the availability of a warm and strong network. And warm introductions has been taken to the next level, I think, the value of warm introductions. So what we did was that we systematically went through with all our members to see how and who they should talk to. And the good thing was that this was valuable on both ends because everybody else was also going home. So they were kind of locked down in their own environment. So when I were calling my partnership contact in DNB or Telenor or Equinor and so forth, they were happy that we were introducing some ambition tech startups where they could start to discuss similar problems that they were looking at. So I think for everyone out there, knowing that you have a strong network or that you could be of help to anybody, reach out and tell them that you are happy to make a warm introduction because it's really been valuable. And of course, for all our founders, it's been ups and downs, just like we will hear two stories today. Some are, of course, not able to make it through. But on the other hand, I think those that are making it through will be more strong and hopefully have a more prosperous future. So we will see what we can learn today, and I think we will get started. So we're going to meet two companies, both of them who I think ran into a quite physical and hard wall this spring, maybe from two a little bit different angles. One was in the round of making an investment track, and the other one was making a hard stop on their customer journey. Both of them, of course, were experiencing a drop in revenues. I think for TicketCo, almost 90% of the revenue dropped. So I think we will start with you, Karl Erik. You're the Chief Strategy Officer at TicketCo, and you're the co-founder. You've been there for 10 years. And yeah, I know that you are passionate about events, and that's also how it all started. So I think before we start any fireside chats, I would like you to go through TicketCo and the position of the company, and of course introduce yourself. Maybe it would be nice.
Yeah, thank you very much. Thank you for the invitation as well. My name is Karl-Erik. I'm one of the founders of TicketCo. Not 10 years, but 8, closing up to 10. They say it takes 10 years to build a successful tech startup. So we have 2 years left, and I believe we're still on the right track. So I'm 36 years old. I live in Os, outside of Bergen, with my family, which I'm seeing much more now than I used to do before this happened. And yeah, looking forward to this presentation and take you through how TicketCo has experienced the pandemic, basically. So I'm going to share screen. There we go. Hope everyone sees my screen now. So we have it totally under control, and we all know what happened in March this year. We're speeding through the universe, and boom, the pandemic struck us with the virus so small that no one had actually seen it or seen what it looked like. So for us, everything stopped. We had no live music, no theaters, no sports, and no one knew how long this would last, and no one knew how long it would take until it was over. We were talking about 2 months, 3 months. People were optimistic, some were pessimistic, but no one had the answer. And that creates a interesting business environment, for sure. So COVID-19 changed everything. We had closed a funding round in December of 4.6 million euros to fund further European growth. And as we know, and as Jan Åge knows, the whole story, I mean, 20% of the story is about the funding. 80% is all about executing what you promised you say you were going to do to your investors. And the cool thing is that we did that. In the beginning of the year, we had 50%, up to 50% growth in the beginning of the year. We had closed all the football clubs in Norway. The UK entity was growing even steeper, and but all of a sudden, the world was upside down for us, basically. So, like you said, we actually had a revenue loss in Q2 of over 70%. That's a big revenue loss for any company. We had to push back our growth initiatives. We had to stop our hiring processes, our marketing processes, customer processes, and we thought this could be a fight for our lives, basically. And the situation, I mean, we didn't have any control of the situation. That happened outside our doorsteps. So what we needed to do, we had to come up with a plan inside the TicketCo company on how to approach this. And we are basically built upon customer and client success. TicketCo is customer driven. We've developed the whole product based on our customers' inputs. And this time it was all about the payments. Hundreds of events was canceled overnight. People wanted their money back, and the phones started ringing. Can you imagine? Thousands of people wanting their money back, didn't know if the event was going on. So taking care of the existing customers, we innovated creating a waiver and voucher functionality, so the ticket buyers could actually ask for a voucher to use later within the same organizer. And we also created a donation, not donation directly, but an opportunity to forgo their money, and the results were astonishing. In the UK, 32% of the first couple of events we did it with choose the voucher. 2.5% choose to give the money to the event organizers. And in Norway, actually 20% of the ticket buyers choose to give the money to the event organizers. And that was due to our innovative approach, helping the clients on the payment side. So we believe that that was something we had to do to save our existing clients. But I mean, every crisis creates new opportunities, and we wanted to create some new revenue streams. So we did what you call a lightning fast analysis, business analysis of what to do. And we thought that the world is going to be digital more now than ever before. The biggest tech IPO in the Nordics was Pexip going public at Oslo Børs. And everyone said new habits will be created. And how would this affect the event industry? That was our thoughts. So what we've learned is that it's not about the money. We believe that even though we had the funding successfully in December, we actually had money to innovate. But also being a small enterprise amongst giants, or maybe we did this because we are a small enterprise among all the giants out there, big players. We developed a digital platform that enables event organizers to sell live streaming and pay-per-view tickets and video on demand to their audience. And what I would say now is actually TicketCo is the digital winner globally. No one has taken that position. So what we did, we built something called TicketCo TV. It's built on top of TicketCo's event payments platform. It secures a frictionless customer journey through a digital event. So if you think about it on the convenience side, you can now sit down in your couch at home, grab a beer in the fridge, and enjoy a concert and pay for it, basically. On more technical parts, it's basically a pay-per-view live streaming and video on demand service built on top of our payments platform, which has done millions of transactions already, and we're simply building a scalable solution on top. And we believe that the old players in this world won't have a chance to do this. One is because they're very big, they're huge, and the ability to change and work the way you used to do before will not work these days. You also have a lot of startups who's trying to take this world. I don't know, Karianne, if you have those in startup labs, but you have a lot of live streaming platforms being developed to take this market. And the question then is, who will win in the end and who will fail, basically? And disruption in any industry is not something new. It happened in the ticketing, relatively young ticketing industry back in the United States in the 60s, 70s, in a book called Ticketmasters, was talking about two big companies, Ticketron and CompuTicket, that no one even knows who is today. Because then Ticketmaster came and took over the whole market. And we believe that history will repeat itself. It will, and we believe that COVID might be the actual reason for it to happen. And the reason why these big players in the world are not able to handle this situation is because they have a lethal mixture of legacy technology and manual working process. They're huge, it's hard for them to change, and they have vertical monopolies through the whole value chain. And then there's, of course, the customers who needs new revenue stream. They need help, they need ways to make money, and they're not getting it from their existing suppliers. So then there's TicketCo, who's always been self-serviced, who's always been a great payment platform for events. So we have completely switched our focus from being a territory structured organization to being a global organization. We now have key account managers and sales people in Sweden closing business in the UK. We have no territory specifics anymore, and we've launched a big partner strategy. We've done this with extremely tight budgets, and we have basically, people have been working super hard. So all kudos to the team, because sitting at the home office, getting up every morning, calling clients, hustling around on video is I mean, it's incredibly impressive. And I'm very impressed by the culture we actually have in the company. And the question is if we will succeed. I mean, one thing is sure, we're attracting clients. We're attracting clients across Europe. We believe that the future is more digital now than it ever was before. Business will be digital. I had 52 trips to London in 2018. I hope that maybe I can get away with 10 in the future because people are used to using digital services. We also believe that a thing called hybrid events will be big globally in the future. And TicketCo, the way it's set up, is now perfectly set up to take a very strong market share. We have TicketCo TV, we're in the sweet spot. Goldman Sachs released a report that the whole music industry will be disrupted this year, but streaming will lead to an increase of 400% by 2030. That's a boost compared to before, provided by live streaming. And TicketCo is in the forefront of this. We are running as fast as we can. We started this development 8 months ago. No one else has done it, and we will keep on running. We believe that the combination of virtual tickets and normal events merged together will be the new normal. And we have, while everyone else has been busy, surviving, furloughing, laying off people, we have taken a huge step forward. We're scaling into Europe. We created a company in the Netherlands, actually 2 weeks ago. So we're launching there as well. And we are using this opportunity for all it's worth to become what we tried to become in the beginning, the global standard of event payments. And in a market where everything was free almost before, the event organizers need a payment solution. TicketCo is perfectly structured. With TicketCo TV as door opener, they are learning to use the product, and then we can upsell the rest of our payment services when the world goes back to normal. So we believe that this opportunity that we have now is actually an opportunity to conquer the world with our vision, like we planned all the time, and nothing has changed. It's just an opportunity to grow. So that's it for me. The latest signing we had in customers is this little venue called Royal Albert Hall that signed up last week in TicketCo. And you probably heard of that. And we are very proud to be delivering the digital events in the future. So yeah, thank you very much.
Thank you, Karl-Erik, and congratulations to the Royal Albert Hall signing. It's fantastic.
Thank you. If you asked me 6 months ago if we would have Royal Albert Hall, I don't think I would have believed you. But
on a hybrid event product.
Yes, that's also another thing.
That's pretty amazing. I think thank you for sharing. And usually I've been doing a lot of talks around how to embrace change from the existing big corporates. Like you say, there is a willingness for you to run fast and to change this industry, and you're seeking the opportunities rather than the hurdles. And usually I would separate this into 3 different approaches. You can either deny that there is a change, like Kodak did. I think that's the most famous one. Or you can try to fight it, like you were talking about the music streaming industry, and then we saw Napsters and Pirate Bay back in 2000. The music industry was fighting. They were telling the telecom operators to shut down those the pirates and the crooks, and rather hold on to the traditional CD productions. And then slowly they have been changing, and now they are adapting. But and then of course maybe one of the most famous embracing examples was Netflix, seeing what was happening with the music industry and just starting to produce their own streaming service in addition to their catalog. So I think deny, fight, and embrace changes are the 3 different alternatives. So I think you're doing great. Thank you for sharing.
Thank you very much.
So then, Jan Åge Skåtun, we will hear from Quantfolio. I think you were establishing Quantfolio in 2015, and you've been a serial entrepreneur yourself. You're the co-founder of It's Learning for 10 years. I'm using that service every day, or my kids are using it, so so I know how it is. And then you've also been very close on TicketCo for many years.
Yes.
But now you are focusing all your time on Quantfolio, and we are very excited to hear more about that journey.
Yes, thank you. I guess it's kind of it's a different story with Karl-Erik, but also quite some similarities in terms of how you choose to adapt to the situation. So I'll just try now and share my screen. So can you see my slides? Yeah.
Yes, we do.
Yeah, so my name is Arne Skotten. I've been working with technology. I'm an economist by education, but I'm working with technology since '99. And I see, and we started It's Learning back in the day, 1 year before the .com crisis. So being a new startup and a crisis hits, I kind of been there before. So there are lots of similarities. And what I do know is that if you get through a crisis like this on the other end, and you make the adaptations you need to do, you come out stronger on the other end. So that's something I've always taken with me. So our story with Quantfolio, in terms of what we do, I guess we're most known for powering S-Banken's robo-advisory service. So that's sort of our signal customer have been, and that's where we sort of started off, and then we've gone into a few other product lines. So when COVID-19 hit, we were having 3 business units in Quantfolio. So we had our robo-advisory business, which has become a very complex solution. This technology does a lot. It analyzes a portfolio. It can project how it's going to go going forward. It selects instruments based on user input. It can understand your risk. It does lots of things, but it's one big monolithic solution with lots of stakeholders, and it's delivered as custom implementation projects. So that's what we had going into before February, basically. And then we have Deep Alpha, which is an analytics platform, which is something we sell to end clients. This is for the professional markets, like macro researchers, analysts. That is a licensed platform. And our third branch was asset management. We had a recently launched fund for professionals, which was a factor-based fund, and we've hired a team to run with that. And we had the first lead investor in that fund. So we were doing lots of stuff, and the underlying assumption and rationale was basically all of these business units consume the same technology platform underneath. So we have, even though it's through business units, it's really maintaining it. There was a rationale behind that. And on the robo-advisory side, this is our biggest business area, we've been fairly successful in attracting big projects with Swedbank. We did a huge proof of concept, basically creating a robo-advisor for Swedbank. We did the same for Nordea. But we also saw some challenges prior to COVID-19 that we were aware of. And when we deliver a very comprehensive advisory service, we had very long sales cycles because there's so many stakeholders that needs to be involved before they buy something like this. So we need to really navigate within an organization. And processes could be disrupted by events out of our control. If you have a 1-year sales cycle, lots of stuff can happen. And in Swedbank, before they would go, and when we were actually discussing the license deal for implementation, then the whole management team were replaced because they did money laundering in the Baltics. And suddenly all my stakeholders were gone, and they started off doing, no, we can't do this because we need to have a new backend system. So they spent 1.5 years implementing a backend system before we were on the radar again. So we saw some challenges, but going into the summer, we had 2 major deals that were maturing that we were going to work on during the autumn out of these. So we had a plan for that. The other challenge is we were only addressing a portion of the whole market. Our target was large banks that had an advisory license. So in Norway, that basically means we could work with 10, 12, 13 end clients on this service.
Yeah, just
Yeah.
ask a question while you go along here. Were these pains that you had addressed prior to COVID-19? So you were aware that these were things to work on? Or?
Yes, these were pains that we realized and we knew, but also then we had 2 major deals that sort of were so mature that if we got those, you know, we would have lots of work, but we were aware of these pains and there were risks, and as my story will continue to show, that there was still a real risk, even though we thought we had these indirect regression. But yes, we have identified this going into COVID-19. So to us, COVID-19, which of course happened, was a catalyst for this change that maybe we've kind of identified, but we hadn't really acted upon it. And in this phase, we were also doing a funding round. Basically, I was closing the round when stock markets were plummeting 30% around me and the whole world was in disarray. So that was also very challenging in terms of closing the round. Luckily, we had great owners that backed us with Farvatn, S-Banken, and we managed to get through the line on the minimum we wanted, but not the higher threshold that we ideally wanted to land. But we were able to get across the line in that, but it was also quite a challenge. So what happened in COVID-19? As I said, the funding process became challenging. We landed just barely our minimum target. Our newly launched fund had a drawdown alongside everyone else, but it even had a slightly more drawdown also because of it took some currency bets. And when the currency also shifted in COVID-19, it became very hard to raise money and get investors on board in a digital world, because this is a relationship business with a new product that had, and part of the strategy was it was going to do better than others in these downfalls. And because things were so emotionally driven in COVID-19, it was fear-based and it happened so fast, it didn't catch that. So that's also a big issue for us in that department. And on Deep Alpha, we saw very early that they got a budget freeze for the licensing for the professionals. So licensing deals were being postponed. And we didn't really see the signals, you know, that these big banking deals were gonna, in the early days, that they were going ahead as usual. But later on, that also surfaced that they were being postponed into more indefinite future because other priorities were taking hand at the banks. So we were, after having our fundraising, we were in a situation where we needed to save costs. So we had to have the whole organization on part leave, 50% leave. We had to make some really hard choices. Can we sustain 3 business units? Is it viable, or is this the time now to actually make these hard choices? And we had to make those hard choices. So we started a process evaluating all business units, and we gave everyone a grace period and made every possible change. And then we made an evaluation. And based on that, we saw that the one business unit that we couldn't sustain was the asset management arm. It was also something that was maybe furthest from the technology we did as a company overall. But this was really hard because this involves people's jobs, but we needed to make those changes. But the biggest thing we did was rethink how we were offering our products and how we were selling our products and how we went to market with what we did. And I'll talk a little bit about that in the next slides. But we also saw that the fundraising, you know, we were always planning with a new round, a growth round by the end of this year. But we saw signals with revenue and the asset management being laid off and cost involved that we would probably need a faster runway for the next round as well. We had one good thing was that basically a newly developed large potential client was still moving forward. So that was sort of the only positive we had in this phase. So what we did, we took our robot. This slide is horrible because there's so much features here, but this is the way we did it. We had a look on our robot advisory engine that had basically does all of these things, but we wrapped it in this one, in all the way to the right, this one big lump of features. And then we saw, okay, but what if we pull out each of these features that we are able to do with this one big technology package and sell them as smaller nuggets of functionality, deliver that through APIs on a self-service model. So instead of selling huge projects on a robot advisory involving everyone in a bank, we can sell leaner features that supports an existing value proposition. So what we did, we dug out all of these features, and then we needed to make some prioritizations, and then we went lean, basically. So we adopted the lean methodology again, and we started interviewing prospects and customers. And it was really fantastic how customers and prospects were really spending the time giving us feedback when we interviewed them on what would they like to see, what are the pains, going through digital ambitions going forward, what would they see, what are they missing. So we started reinventing the way we basically delivered our technology. So by going lean, basically what we achieved is that we got a prioritization flow on which kinds of features should we lift out and make available as self-service components. And suddenly we saw that we were not only targeting banks with a license to give advice, which is a very limited market. We could deliver features to banks like Fana Sparbank that would help their customers choose funds or see the value of saving in funds by one API feature. So we were expanding our markets exponentially, basically, in terms of what we're doing. So suddenly we had products for every sales call. This is an example of our stress test that can simulate scenarios. What happens with your savings if there's a new financial crisis, if there's a new oil crisis? We started mapping out the effects of COVID-19. So going forward, we were able to simulate what if a new pandemic arises? What happens with your portfolio and what are the safest sectors to be in when this happens, et cetera, et cetera. This uses a Nobel Prize winning theory. It's from Markowitz, which basically is portfolio optimization. It's part of a robotic offering at S-Banken today. But lots of clients, they just want this for their customers or their own holdings. So this is now a separate API. And the same goes through with sustainability, to be able to choose more sustainable and giving these choices to customers selecting funds. So not a full advisory process, but we help people select better funds within a bank. So all of these features now are things that we can sell. Really change the dynamics. For every sales call, we now had something that they needed. Instead of having a sales call with someone, oh no, we're not planning robo advisory. Okay, talk to you in a year then. So that's basically a huge change. So just to put it in context, with S-Banken, what we deliver there is full robo advisory. It uses lots and lots of modules and features, and it's soulless project delivery. Whereas Avanza, which is a new client, they just use a single API that's able to predict the future development of a portfolio, anything a customer owns. They have their existing features on other parts, but we just slot into a missing component. And we're already discussing with them additional features that they want to expand with. So we have now a model of getting the foot in the door with one smaller component, and then with the upsell of everything else we had, because they're all interconnected, it makes sense to have more modules. So the results, is basically we've expanded our potential customer base. We've reduced sales cycles from years down to weeks and months, smaller deals, but a higher volume of deals. We align much more with existing customer initiatives. And we see that in terms of scalability, when we're moving towards self-service APIs, we can achieve true scale. It doesn't matter if a client is in Norway or England, or basically we just need to understand the investment universe, what they have, and we put that in, and they can use our APIs. And we also see that the development between our products align much more. So whatever we do in Deep Alpha will be a module for banking clients as well. So all of these things are now brought together much better. And by doing this, we were also able to attract seasoned finance professionals, and we closed an earlier round than we anticipated, and really used our network to reach out and got on board former Skagen Fund founders. And we raised 4 times as much money than we were asking for, because they said basically that scaling takes more money than you guys are asking for. So we believe in you guys, but we need more money. And they were right, of course. So now we have that in box. We have the highest ever quality sales pipeline. I can now actually say, as a sales manager, have a valid prediction on when things are going to close, whereas when a sales cycle is 1 year, it's so many moving parts. And we've closed one of the largest financial institutions in the Nordics in September, just before closing the round, which is also huge for us. I can't disclose who it is yet until we launch it in the market with them. We're building it now. And now COVID-19 triggering all these changes is now a key driver for offering, because if anyone needs to be more digital now going forward in this regime, it's banks and the way they interact with customers on savings and placements. So that's our journey, at least. So thank you.
Thank you for sharing. That was super interesting. So you got Karl-Erik, he had closed with Royal Albert Hall, so you have your Royal Albert Bank.
We have, yes.
We'll name it Royal Albert Bank for now.
Yeah.
That's wonderful. I think what was, I stopped you during your presentation. It was because it was interesting to understand that your backlog was you had already defined the pain points, and you needed a reason to start to change your organization and the way of thinking and how you were approaching your customers. And you told the story very good, but if you're looking back and there was no COVID-19, would you have been able to do this then?
Yeah, we might, because we have identified it, but we wouldn't have been able to do it at this pace. We wouldn't have been able to get all the employees, because we have a great team and people are hired to do different things, and everyone pulled together in doing this as a unified project, because we're in this crisis mode. So I think it's just triggered this urgency and the speed and the pace of the innovation that we needed to do, that we wouldn't have been able to do otherwise. So I think if COVID-19, we might have tried to lift out one of these features and test and have a longer cycle of doing this. Now we just needed to make this bet full on and say, this is the way it needs to change, and we need to make this bet, and we believe in it. It's kind of what Karl-Erik also did. We can lie down and ignore things, or we can believe that the future looks like this, and we're going all in on that. So that's sort of.
I just think the difference, now you can call me wrong, Karl-Erik, but I think the difference was that Karl-Erik didn't have a big backlog of pains, or his industry was functioning and there were demand for his service, and he was selling tickets like ever, and the event business was going skyrocket. So I was really impressed by how you've been able to turn your identified backlog. You were still just your backlog. You didn't dare to touch it, or you didn't have the capacity, or even maybe you didn't feel that it was right for your organization at the time to start forcing those changes.
Yeah.
And I think one of my, the company I would compare you with now is Amazon Web Services, because you have been able to take down your microservices and make them available as a archive or in a catalog, which is very similar to what Amazon Web Services is. So you're the next Jeff Bezos now. So.
Very good. I can live with that.
No pressure, but do you agree, Karl-Erik, that there's a difference between kind of how structured the backlog or the definition of what to work with? I think you were more left in the dark. We are now, there are no tickets to sell, so what do we do?
I think I recognize the sales cycle Jan Åge is talking about before COVID and after COVID. We also had I think it was a pitch to payment of about 6 months in average, which also included small clients. But all of a sudden, everyone needs a new solution instantaneously. And that creates a much quicker sales cycle. We took out some reports as well, and we see that before, when the sales team closed the client, we got about 10%, 20% of that revenue the same year activated. But now we're actually up to almost 60% in the same year as the client is closed. So first, you have a much shorter sales cycle, but you also have a much quicker onboarding of the customer, because the product is easier to understand and it's easier to start using, and it's more self-service. And I believe that's a similarity to what you're doing, Jan-Åge, as well. Making it easier, making it simpler to start using, and making this decision process quicker.
Yeah.
So, Rea, just a question to you. Are you taking questions from the audience?
Yes. So the audience, please send some questions.
Yeah. Okay. So do you just disturb us if
Yes,
there are questions you want to fill in? During crisis, it's important, of course, to keep the owners engaged, and your investors, or maybe some investors would like you just to pull out and shut down the business, and or even sell or do stupid things that might be not in the interest of the management team. Can you tell us a little? One of you can start. I don't know, Karl-Erik, if you want to start with what happened in the boardroom the day after everything shut down.
I mean, the situation was very fragmented, and we had no understanding of how long it would last, right? So you have to, first of all, show and prove to the investors that you got your house in order. So you're able to do tough decisions, you're able to do tough cuts, you are able to do redundancies and not be passive. And after you've done that, you prove that you can control your company through a crisis. That's like step number one. This is what our experience was. And then when you feel that you're kind of safe, not safe in that way, but you're more safe than you were, okay, it's not that bad, we can actually stop the growth initiatives. We can actually cut a couple of activities that's not generating revenue. We say, okay, what can we look for? Are we a company that's engaged and innovative, or are we a company that basically just waiting for everything to go over? And our investors are proactive, they're engaged. Our board is proactive and engaged. And that is extremely important, because if you don't have that all the way through, you're not able to do a decision. That would be a crisis situation for us. So we were able to make these bold moves, and that's because we have the backing of our investors, and that's because we have a board that communicates well with the investors, and we have a good organization that's flexible and quick to turn around.
I just see that there's some questions coming in, one for Karl-Erik and one for Jan-Åge. So since we're talking now, Karl-Erik, would you like to comment on the thought process on creating business model for TicketCo TV, and how did you decide to get paid? Like, what model did you choose?
We are a transaction-based service. And what was quite cool is that we saw that the competition in the market for that service is much lower. So we decided to price the products a little differently. So we have an average percentage of all our clients of about 5.2% on all transactions. We are now selling to new clients TicketCo TV for up to 8%. So we've actually increased the gross margin significantly with TicketCo TV. So basically that means that if you, let's say you have a 4%, you need 100 million in transactions but if you run by 8%, you can get away with 50 million. So all in all, the business economics is more healthy now than they were before, which also enables us after COVID to take a little piece of the value chain in a small niche in a big world, basically. So it's transaction based, but then again we have new revenue streams coming in. Subscription models. We're doing subscriptions for season tickets for football clubs, for example. But we can do subscriptions for digital content for Royal Albert Hall, for example, for a whole year. So you're basically buying into a subscription from Royal Albert Hall, getting great culture, content, etc., that you wouldn't access before. So there are some new revenue streams there, and we can also we're using Amazon Web Services, since you mentioned that. We're plugged in the Media Live functionality, and also Amazon's CDN providers. So or Amazon's content delivery network. So we are able to scale this quickly, which also enables us to get paid for those services on top of our existing product. So it's quite interesting what's happened, and we've learned a lot on revenue generating activities now.
Very good. Just one question then before you guys can get back to it. It's for Jan Åge. Someone is wondering how your customers' investments changed after COVID-19. Have you noticed any differences in the choices they're making?
No, we don't have really a lot of insight into what our sort of customers are doing and investing, because that's ultimately the banks that have that insight. So we don't really have that insight on the customers of our technology. What I can say in general is because we talk to lots of investment professionals, etc. And what we've seen now is, of course, that a lot of the money has flown towards technology because these companies have benefited from COVID-19. People spend more time on Facebook, on Netflix, etc. And I think what we will see now going forward, I think we're already seeing it, is that these kinds of companies, technology companies now, might not see the same growth, or even they might see some hits, because as soon as the news of a vaccine is out, investors are seeing that, okay, the valuation and growth of these companies are now so high, and people don't consume as much Netflix when a vaccine is out, and so all of these things influence. But at the end of the day, with interest rates, this really haven't been anywhere to be if you want growth on your money than in the stock market, basically. So
great, thank you.
Great. I don't know, Jan Åge, would you like to say anything about your investors and the board room and the feelings?
Yeah.
Did you have support?
It's definitely a lot of support, and it's very much the initial assessment, like Karl-Erik said. You're expected to make the necessary changes to make sure. Step one: how long is our runway if we do nothing? How long is the runway with the necessary adaptations we need to do? And obviously we need to very immediately go in and see how can we make the cost scheme and manage redundancies and stuff like that. So that was an expectation, and a very involved board in that process. And then once that's done, then we started the process of saying, okay, what needs to happen now for the company and what changes? And we got really good feedback on the changes that we're doing on the product side. And we have people in the board that's worked in Accenture with technology for many, many years, etc. So we were able to sort of have these good discussions and experience in the choices we were doing in the administration. We got the support also from the board on that. So I think we all came together in that sense.
This is a non-related COVID-19 question, but speaking about your investors, S-Banken is still an investor, as far as I know. Yeah. There is always a question about when you have a corporate investor, an industry investor like you have, how is that affecting your ability to sign a new customer within or with the next bank? Has that been any discussions, or has it been okay? Are they more are they smarter now than they used to be?
I think what I can say, I think it's been a huge learning curve for both Sbanken and us in terms of it's Sbanken's first investment. It's our first time onboarding on my first experience onboarding an institutional investor. So I think we found out on how the dynamics should be. And if you see Sbanken today, their rationale with the ownership in Quantfolio is purely financial based. So they've removed prematurely. There were some exclusivity constraints and that we had to concede in onboarding, etc. But we had a very fruitful process and removed these things because the company needed it. We're re-signing the agreement with them now, and and they're also now below the sort of what used to be a very important thing for them was the negative control threshold, where they basically said the company needs new scale, new owners that can lift the company. So and we're backing, but as a financial investor now. So I think from where we are now, I think that's been a really, really healthy development, and we now have an ownership strategy that's across the board unified.
Yeah, that's good to hear. I think because these are discussions that we have with lots of the companies at Startup Lab. If you are going with an industrial investor, make sure that it will not affect your opportunities with similar or their competitors. So like for your part, it would mean that Nordea or DNB would not sign an agreement with you just because you were partly owned by Sbanken, one of their competitors, which would be stupid, of course, but emotional maybe.
but it's still, and maybe sometimes that's been a reason, and we haven't just been told that's the reason. That might be, of course. But I had this discussion with Joachim Sjöblom at Minna Technologies. They do subscription. They sell to banks with automated subscription cancellation, and they've been quite successful. And they have several banks in their ownership, and that has never been an issue with them. But maybe he said it was even having two banks on board was better than one, actually, because then, yeah, it was more balanced. So
that's good. I was a little bit curious, Karl-Erik, about the hybrid events. Can you tell us a little bit how that will play out?
Yeah, I think moving forward, I mean, one thing is the next couple of months where we have countries slowly reopening. So that means you can be 50 people at an event, you can be 100, you can be 200, and then all of a sudden you can be 100 again, and then you're up in 200 again, like we've seen now. So I believe there is a need for a digital alternative to a physical event, either due to capacity restrictions, like we've seen with recently, but also in the future. I think that if you have a great concert or a great event and you don't want to travel or you can't travel to London or Royal Albert Hall or wherever, you might choose to sit at home and enjoy that concert whilst there is an actual physical audience in the room. And that is the definition of hybrid. And this wasn't a need before by any means, but it has now become a need due to the pandemic. And also the digitalization. I mean, we are used to having video calls. We're used to consuming digital services completely differently than we were before. So I think that is the key for us. And that also means we are completely agnostic. So we can work together with the big competitors, delivering a brick that says live streaming and video on demand and digital content on top of their existing platform, which also makes the sales cycle much quicker. And the funny thing as well, when these big companies start using TicketCo TV, they get the feeling of the product. So it's the old get your foot in the door strategy, which is really working. with that product. And then we can upsell the rest of the service as well. So there are a lot of synergies around the hybrid part moving forward. There's also a lot of Norwegian big festivals who's looking at digital events because they have so much great content that they want to sell and want to offer to their audience. So that is our definition of hybrid.
Just a question, Karl-Erik. If COVID-19 didn't happen and it didn't go digital, would you have signed Royal Albert Hall, you think?
No.
So it opens up new customers that you wouldn't normally sign then as well, I guess.
Yes, exactly. I think we wouldn't have gone for a Royal Albert Hall at all because it was not the segment we were prioritizing. But now it is because there is a big need. So they wouldn't be a customer. We wouldn't have that relationship if it wasn't for the pandemic.
And I think it's Royal Albert Hall would probably still be discussing with the public broadcasters or the commercial broadcasters on their more traditional formats. So this will, of course, affect. And now I think this is a shout out to the broadcasters that should you deny, fight, or embrace this change? And how can you become a partner with TicketCo TV? You should go over to Media City and see if there are anybody home at TV2 and ask them if they want to be your partner. Because I think this will affect the commercial broadcasters more because they are of course focusing on their live content and live events being one of their major drawers to their to the rest of their TV scheme. So okay, we're closing in, boys. I wish we could spend the rest of the day, but I don't see any more questions from the audience. Oh, there come one. We will have this last one then. Maria, do you want to read?
Yeah, let's see. This is for Karl-Erik. Do you have good experiences on how to lead a team that is now suddenly working at home, but will need to work even harder to achieve a great change that you were going through?
I think that was another change that we had to do. We're used to traveling a lot, which is also a positive thing. We're not going to have the travel budgets we used to have before moving forward. And that's going to be a hard priority for my end. But sales is all about motivation. Marketing is all about motivation. Getting out there, being part of a team, delivering. So in the beginning, we saw that it became a little bit more distanced. People were sitting in London during summer, super hot in an apartment, couldn't even go out, spread across the UK. So people are social, they have social needs as well, which is extremely important. So I decided to launch morning meetings. Every morning we have a morning meeting, and that's not like what did you do yesterday. It's not a controlling meeting at all. It is more of a meeting on how people are doing, what are their key priorities, how are they thinking moving forward, and we've used this opportunity to connect even deeper. And when you have a quite advanced system that you're selling, so you can say, okay, what's the difference between a guy selling a used car and a guy selling technology? And the guy who's selling the used car, he actually knows he's lying, right? That's the difference. And one of the key things in sales as well is to keep control over all these bits and bytes that we were developing and instantaneously implementing that in the sales presentations, the marketing content, etc. So it also gave us the opportunity to go straight from R&D, straight to sales, straight to marketing on a day-to-day basis. And when you then see the customers coming in, the motivation and the snowball effect keeps on rolling. So I would recommend doing the morning meetings, not from a controllable to control your employees, but more to gain insights, understand, etc., get customer feedback, because that really helps, at least from our point of view.
Great.
Thank you.
Thank you. I see we are just about done, so I think we'll try to stay on time. But first and foremost, I want to thank Jan Åge and Karl Erik. I think it's extremely important that founders as yourselves share your experiences, especially in a time where several startups are struggling. So thank you a lot for sharing. And Karianne, as always, it's always great to have you with us, and thank you for participating as well. So I just want to say thank you on behalf of Finance Innovation to all of you and to everybody participating.
Thanks for having us.
Thank you for having us.
All right.
Have a good day. Bye-bye.
Bye.
Bye.